Actually, the data in Europe today isn't so bad. The contraction in the Eurozone is slowing, according to the composite PMI, and we've had a nice rebound in UK retail sales. But look at the degree of loss that you have there. Very big numbers today, because of course Europe, whereas yesterday we split our reaction to the Fed yesterday on the session and then today on the session, and it's 450 points on the Dow. They're getting it all in one. And that's what you see today. It's a double whammy at the same time, a double whammy of the Fed and China. And it's interesting, those big miners are bearing the brunt of a very broad sell-off. So 95% of stocks around Europe, of the 600 stocks, top 600 are down. But those most exposed to China, like the miners, are those that are falling the greatest. Let's have a look at the miners if we could, because I can't. Thank you very much. You'll see Randgold Resources within gold down 7%. And the European exporters, those that export around the rest of the world, are also down, partly because of their exposure to China. BMW within beer, InBev, Electrolux, and Swatch. We have some data from the Swiss today suggesting that watch exports from Switzerland were down 3.9% in May. At the same time, and I know you'll want to comment on this, we've had the yield spiking. So you have a sell-off in bonds everywhere. It is particularly acute at the periphery of Europe, and therefore you see the Italian 10-year yield, the Spanish 10-year, rising to levels that might look troublesome to some, but I would say that they have front-loaded their issuance, their degree to which they've had to raise money on the open market to the first half of the year, so it's not as acute as it otherwise might be.
Very smart move. The question is now, if there's more pressure, maybe Mario Draghi has to actually talk a little bit more about that OMT program that still doesn't exist.
Possibility of directly buying in the markets. Let me just mention the UK banks. The revelation today that the regulator wants them to raise $21 billion to shore themselves up. Half of that is on the way. After last night, of course, the Chancellor, the Finance Minister, was talking about how they could possibly get RBS to market. Lloyd's looks a lot easier.